Julien, it seemed like a week ago we were celebrating the S&P 500 hitting that new record high. It seems like we're kind of taking a breather now. I guess when you look at the picture here in the U.S., are stocks here in the U.S. still a buy?
We believe so. We believe the U.S. market is better positioned for the months ahead versus the rest of the world. That is a function of the visibility we have compared to the uncertainty you were referring to with regards to Italy in Europe, but also emerging markets where the European economies and the European companies tend to have a slightly higher exposure to emerging market. Therefore, any stress we're going to see in the region will have an outsized impact on European equity. So it feels the U.S. equity market remains the place to be. The only thing that could change that is if the technology sector, which has been a very strong leader for the market, starts turning around, and if suddenly value comes back into play, we could see maybe the outperformance of the U.S. market come in a bit in the next few months into year end. But it feels like so far, at least, the U.S. remains the place to be.
Well, when you look at the U.S. performance and particularly that divergence between what's happening in the U.S. markets and what's happening in EM and even in some of the other developed markets, at some point you would think intuitively that divergence would have to close, that gap would have to close. Is there any reason why we shouldn't expect that to happen?
It should close in some form or another. The key question is around timing and whether this is a structural outperformance that the U.S. market will be able to enjoy versus the rest of the world, because in part of its higher weight to technology, but also in part of due to what's been happening in this particular part of the world, tax cut, but also stronger earnings growth in general. So the only reason why we would not see the divergence closing anytime soon would be because growth remains the only place to be. It seems unlikely, given the very strong performance that growth has had over value and that tech has had over anything else almost. So it is likely that we're going to see this outperformance come in a bit. But over time, it feels that tech is definitely a sector we want to be overweight on. This is a sector that is delivering very strong earning growth, and we expect that to continue over the coming years.
You say tech as if it's all one big behemoth, but we know that obviously there are huge varieties in performance even within tech. So where in tech, Julien?
Well, at the beginning of the year, we saw that the semiconductor space was particularly interesting because of this cyclical uptick. We sort of moved away from that, and we're now more focused on software, internet names. That's where we do see the best potential for growth, and so we would focus on that more than anything else within the tech sector.